Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. We'll go back to the trade that we actually placed here. So anyone who actually stayed in this trade, well done. I actually got stopped out by something like 3 or 4 pips, which was super annoying. And now look where the trade has gone to. So anyone who took that trade there, well done. It's gone down to a 5.15 to 1. Anyone who took that and stayed in it, well done. Anyone who took it and got stopped out, that is mighty frustrating. Mighty frustrating. But again, that's trading. So we've had 1, 2, 3 big bars selling off. Okay, so we've had 3 huge bars selling off, something that we sort of expected. Now, we didn't expect it to break this level, but we expected it to come down to this level here. That's why we have that level there, and that's why our take profit was just inside there. So we expect this to come down to here. Anything after that is bonus territory, isn't it? So I think the likes of Tyson there and Shane, you guys have actually trailed your stop loss on that. Well done. Happy days. You've got some extra % out of this. Now, question would be, is this here at a point where it's going to return, or would we expect this to continue going? So how we determine that is by getting some sort of a horizontal level underneath it and then having a look. So I'll drop that there. I'll actually change the color so we can actually see it properly. I'll change it to black so we can differentiate. So we're back over here. Whoop, get rid of that one. So we're going to zoom in now and have a look. Take it on, Audra. So is this here, this black line, is that a good level around here? Yes or no? Is that something that we would be looking to potentially jump in on? Or is that not something we'd be looking at? That'd be a bit of a soft level, wouldn't it? It's not a level that would massively sort of jump out at me, is it? It's one of these ones that it could turn around there, it may not. It wouldn't be something that I'd be going, yes, this is definitely the area where it's going to turn. Now, what I'll do is with this red line, I'm going to zoom out and actually see where this red line has come from, see if there's anything here, and there's not. So I've put that red line in there, and we'll see historically is there anything. I know there's not. So what I'll do is I'll have a look at that red line, and then we'll play around with it. So leave the black line where it is. So does that there look like a pretty decent level? So just to highlight what we should be looking at, so I'm giving you all the benefit of the doubt where you know what you should be looking at. Well, the red line, we've 1 touch there. We have 2 touches there. This here is a break, so this is not classed as a bounce. There and there. So we have 1, 2, 3, 4 touches. But what do we need to be aware of when we're looking at this level? We need to be aware of the likes of this. That it broke it there. It broke it there. It broke it there. So it has broken a few times that area. So is that a potential area for us to be buying off of? Absolutely. I would see no reason for the market to stop before there. Now, again, I can't 100% dictate where the market's going to go. Like on the last trade, I got stopped out by what was 2 or 3 pips, where I had a loss. Whereas if the stop loss had been 2 or 3 pips bigger, I would have went on and had a 5-1 winner. Now, alternatively, okay, because remember, nothing is ever perfect. Alternatively, I'll get another horizontal and we'll change the color of that again. Could be one there. I'm going to change the color of that then to blue. Now, alternatively, is that a better area? This one. Which of the two is a better area? The red line, or do you think the blue line? Which of the two do you think is the stronger line, the red or the blue line? Okay, so most people think that the red line is the strongest. But for me, the strongest one here is the blue line. Now, why I think the blue one is the strongest, or sorry, yeah, the blue one here is the strongest, is because we've had 2 rejections, we've had no breaks. We've had no breaks. We had this here, was the first time I went through it, and then bounce rejected. So that for me is stronger. Now, it doesn't necessarily mean that I'm right, but there are maybe 2 levels there at those 2 points. So if we are doing that and that's our consensus and that's what we're thinking, what we have to do now is we have to make sure those levels are in place. So remove that. I'm going to remove this as well. I'm actually going to change the color of that actually and change that back to red. Okay, so that's that level. So there's the 2 levels we have in place. So now we go back and have a look and see what's happening right now. And with that in mind, is there any indication for us that the market is going to turn at that particular point? Is there anything there to tell us that that's the place where the market is going to stop dropping? In my humble opinion, no. That doesn't mean that the market is not going to stop. Now, also, does the market 100% bounce off levels on this particular chart? Is there anything else that we should or could take into consideration when we are looking at the likes of this? I couldn't take the noise anymore. I had to close the. No, I have to turn the fan on. So there is other things that we need to take into consideration, the S&P and the Dow, because there are similar markets, and if they come back down to huge levels first, the market tends to bounce at one of these levels. So what we have to do is we have to look at the S&P and we also have to look at the Dow and make sure they're not sitting on any key levels. And if they're sitting on key levels, then we could take this long. but we wouldn't take it on this particular chart. So we have to make sure we're looking at all of them before we take these trades. We have to look at all of them before we're jumping out of our trade. Okay, so that's a key thing we have to do. So if we now go on to the S&P 500, again, it has broken this level. Again, we have this little inside bar today on the futures market. Horizontal level line underneath it, just to see where we are and where we're sitting. And now we zoom in. So, is this a better level than the Nasdaq? And if it is, could we see a rejection here? And the answer to that is absolutely yes. Absolutely yes. Now, we may want to actually bring that down a little bit lower. May want to bring that down a little bit lower. And look, we have a bounce here. Bounce there. Bounce there. Bounce there. And a bounce there. And we only have the one rejection. And the one rejection, or the one break, is there. So do you think that would be a decent level? Absolutely, it may. You may be of the thinking, though, oh, Henry, that's not strong enough. This one here is. Because it was resistance, it's now support. But for me, this is a pretty decent level here as well. This is a pretty decent. This one here is a stronger level than this one, but this one here is the most visual. This is the most visual one. So people may just look at this. People may just look at this and not take it on board. Or may just ignore this and expect the market to come straight down to this one. So in this particular one, we have sort of two levels. We have this one, which is a pretty decent level, and then this one, which is a much more visual level. So in this one, we expect a little more downside, but what may happen is we just get a big long wick that comes down and touches both of these and then finishes up here today. I would not be surprised if that happens. I would not be surprised if that happens today. And just to draw that out for you guys, that we get a big red bar coming down here. Then it finishes literally there. Why do we think that may happen on the Nasdaq and the S&P? Because we'd expect to get some buying power jump back into this market. Would expect to get some buying power jump into this. We have a lot of people here who have stocks and underlying stocks, and they're looking to get it at a cheaper rate. Whereas you will have some buying power jump in at one of these levels. The question is, which one is it? And then the second question is are we happy enough to jump in on these levels at the bottom? So my question would be is if the market came the whole way down here and hit that level and hit that floor, would you guys take a trade there long at that point? Yes or no? Yes or no? Which one would it be? Only if it rejects the pending order. Now, for me, this is not a trade for me. I wouldn't be looking to buy this. This is not a trade that I would be looking to do. But if we're looking at this structure here, you would probably expect it to hit this floor here, come back up and hit that ceiling there. So we would have a break and retest. And then at that point, we'd be looking to short the market again. At that particular point, we'd be looking to short again at this particular point. And that's where I'd be looking to take a trade again at that point. And then hopefully it would continue dropping. And that's where I would look to take. So at this particular moment, no, not really. I will let the market do what it's going to do. See if it pulls back. And then if it comes back to that, what was a floor is now a ceiling. And then potentially looking to take a short at that point. Would I be looking to take a long here? No, that's not how I trade. But there are some people out there that trade that way. Some of you guys in the group trade that way. Make sure when you're taking a trade there, you put the screenshot up of what you're doing. Again, we know not every trade is going to be a winner. We know not every trade is going to be a loser. So just pop them up in the group. So that's what I'll be looking for. I'd expect this bar to finish like this. Again, I can't guarantee. It could finish down here and continue dropping. Absolutely it could, but I don't expect it to. And then if we have a look at the Dow, again, I'm going to get that horizontal, just drop it at the bottom of the Dow, and then zoom out and see what's going on. Now we actually have a level a little bit lower on the Dow. And if we look along here, that's the level there. And there's nothing really, there's a little bit higher. There's a bit there. So we have one touch there. I'm going to drag it across. We have three touches. Okay, so we do have three touches. So we have one there, and then one today. So out of the three of them, this one is sitting on a level, isn't it? Sitting on a level where the Nasdaq, the S&P is not, but the Dow is. So my question would be on this particular one. Do we think that this is now going to hold and bounce to the upside? Or do we think this is going to continue dropping further? What is your opinion? Bounce to the upside or continue dropping? What's the overall consensus on this one? What do you guys think that's going to happen? Okay, so the general consensus is this is going to drop more. Okay, so what we'll do is we'll clear the drawing there and we'll have a look at the lower level. Clear all the drawings and have a look at this lower one. So this is one that I put in before. It's not one that I've put in there now. It's this the one I put in further. And I have a look at why I have that in further. Now for me, this is the level. Dishwasher went off. But this here, for me, is the level. Look, we've had a ceiling here, and then we had a drop for the pandemic, was it? We had a drop for the pandemic. Then it broke. And look, then I retested it once, twice, three times. So we've got 1, 2, 3, 4 touches. So for me, that there is the level I would expect it to come back to. And a question to you guys then, would that be a psychological level there then? And we've now got down to the high of the pandemic. Absolutely, yes. Absolutely, that would be a level. That would be a psychological level. Yes, it's 30,000, but also it's a psychological level that was the high of the pandemic. We've now any gains that we've got from that, we're now back at break even. We're now at break even for that point. So back down to that level there is a 20% drop. So the market would have dropped 20%, the Dow, which anyone who has traded before knows that a 20% drop is now a bear market. Don't be surprised if we see it hitting the 30%, which is slightly lower. But there are some hard levels just above that. So that's where it could drop down to. But again, we trade and say we trade what we see. We look at what it's given us. Now, in this particular scenario, the S&P 500 gives us a much better way of trading this short. It's much lower than the previous low. So then if we get a pop down to here and then pull back, we can then short it. So make sure when we're looking at these three, we're making sure we're looking at which one is setting up correctly. Are the other ones at a point where they're actually ready to pop to the upside? Or if we're taking these short, are they actually sitting on levels that we're expecting it to drop from? Has anyone got any questions on the three of those? Now, anyone who is sort of dollar cost averaging into an ETF, does anyone here not know what an ETF is? Please say yes if you don't. You say you don't know if you don't know. Okay, so everyone seems to understand what an ETF is. Okay, so anyone who is dollar cost averaging into an ETF, is this good for you or is this bad for you? See this drop we've had a drop of 20%. So we'll go, well, SPY was mentioned, so we'll go to the S&P 500. And this one has dropped today. It has dropped 22%. So if you're someone who is investing long-term and you're looking to invest in the SPY, this is a really good thing. Why? Because by the time you start putting your money in again, it has dropped. It's getting back to a cheaper rate. So when the market does take off, you've got the likes of your SPY and you've got a couple of installments at much cheaper rates. So a correction in the market like this is good. So a lot of you guys trade crypto here. Okay, a lot of you guys trade crypto, and Bitcoin yesterday dropped from 64,000 and the whole way down to 22,000. Do we expect to see that happen on the likes of the Nasdaq, the S&P, and the DOW? Do we expect to see that type of drop happen on the likes of these? Yes or no? So most people have said no. Why do we not expect the same sort of drop? Darren said, in a recession or a pandemic, yes. Not right now. Darren, I would even go to say as much as the only way we'll see a drop like that is if all out war is declared. Too many big players involved, too much money, governments won't allow it. I don't think a recession, I don't think any of that will pandemic. I don't think any of that will stop the market, in my opinion. War, yes. Either of those, no. So Mark said there's too many big players involved that make too much money, governments won't allow it. Well, if the market drops 60%, the government have nothing to do with it. They haven't got enough money to halt that. What they can do is they can try by pumping some money in quantitative easing and stuff like that there. But if the market is dropping at that rate, they're not going to be able to. Yes, they've done it for the pandemic for a little while. But the idea behind this is that the big difference between the crypto market and what we're seeing here at the moment is that this is a natural pullback. A natural pullback. This is what we're wanting to happen. This is what we need to happen for the market then to take off again. Whereas with the crypto, it is literally supply and demand, which means it can be manipulated. Now, if you look at supply and demand, you have investors across the world. Now, are investors scared at the minute? Or are they happy and bullish at the minute? Which of the two are markets across the world in general? Very happy. They're scared. Absolutely. So we saw a huge jump in the people trading in the pandemic. People staying at home had nothing to do. They were saving money because they weren't spending any money on travel, weren't spending on going out, wasn't spending anything like that. They stayed in, which meant then they made bucket loads of money, which happens. It's what people do. But at the moment, anyone who has invested in the market in that particular time has now exited the market. So the volatility is not as there. The market cap is not as there. There's not as much money in the market at the minute. Now, it may come back in once the market becomes bullish again, but at the present moment, everyone is out of it. Or they're still in it and they're crying. Why? Because Bitcoin has dropped so much. This Nasdaq has dropped. S&P has dropped. So what we need to do is we need to find a sort of a floor, find an area where the market will consolidate. And then once it consolidates, that's where we start looking to buy up. Now, we did potentially think that this was the beginning of it. It wasn't. It's now gone lower. Let's see if one of these levels will be it. And we will cross that bridge again when we come back to here. Is this the beginning? Is this where it's turning? But we won't have any confidence in the market till it makes higher highs and higher lows. That's where we will have it. So just to bring your attention to it. So let's have a look at the Nasdaq. Now I'm going to show you the last natural pullback that we had on the Nasdaq. Now, was this a natural pullback here? And the answer is no, it wasn't. That was the pandemic. So we have to go back further and find the previous natural pullback. And that was the last natural pullback. Remove this one here. So if I get a ruler and I look from the top there down to the bottom, it was a 24% pullback. And I started in September and I went the whole way till January, December, January. And look what happens. From that point, we then, once it got to a point that it was low enough and the market was happy, we had a phase one, phase two, phase one, phase two. And this is where we started jumping into the market again. And then from that point, the market continued to go up, didn't it? And then we're back down to where we are. So that's the last natural pullback that we've had. Again, everyone at this particular point, what do you think everyone was talking about at this particular point? At this particular point, everyone's talking about, oh, wow, is the market's going to drop? Is it ever going to turn? I've lost all my money. What am I going to do? They're the kind of conversation that people have at that particular point. Exactly the same conversations they're having at the minute. Should we buy? That is not a conversation people have usually at that particular point. At that particular moment, when the market is dropping like this, that is generally not a conversation most people have. You guys are a little bit different because you guys have traded before. You have potentially, some of you have seen this before. Okay. My pet dog. So the idea is you guys now have a little more skill set than this. You also have me talking about it. You also have every other trader in the world talking about it. If some of you guys ever watch any other traders. So the idea is to sit through it. We will trade it short and CFDs, whether it's the Nasdaq, the S&P, and the Dow. So we'll trade it short if we can. Sometimes we will have losers like we have here. And then sometimes some of you will have winners like we have here. So depending on how far away you put your stop loss. And we'll try break even or try make a couple of percent on the way down. And then what we do is we start buying up once it starts to turn. But once it starts to turn, generally they go up quite quickly and they go up for quite a long time. An average phase one is anything between 12 months to 18 months, generally. So if we pop up here onto the weekly chart, so if we are on the weekly chart here, so there was a pretty big pullback as well. 2016 to here, 2018. 2 years. From here, 18 to 22. Well, about 18 months. Now, this particular one, 22 to 21. or 20 to 21. Now, the difference with this one is this one's a man-made run. This is one done from quantitative easing. This wasn't a natural run, okay? But again, it's pulled back. And it may even pull back into the likes of this area down here, the pandemic low again before it takes off. Only we'll see in the near future. But we carry on trading short. We carry on scalping in and out. Well, I say scalping, trading in or out of the market as this is on its way down, making sure we're not blasé jumping in. But the idea would be is every so often we buy up some stocks. Is this a decent point to be jumping in and buying up 1% of your stocks? Well, maybe at this level here. Maybe at these levels here. Maybe at this level here. So you have to now set up a plan of action. You may want to see 2 clear cycles before you start buying stuff. Absolutely, you may do that before that happens. So you have a plan of action and then you execute it. Now I'm going to pop over to crypto over here because it had a pretty big drop over the last couple of days. BTC. Chart. Move that out of the way. Pop this up. Oh, did I get triggered in? That's the question now. Oh, let's see, we'll have a check. So I had an order at, I think it was 21.000. Now we've seen the market now pop down and hit that 21,000 there. Did anyone else have an order at 21,000? So it looks like some people did, some people didn't. No, my order never triggered in, which is a little bit frustrating. With the spread, it never got triggered in. Which is massively frustrating. But the next level on this is down here at 12,500. We had a conversation here, I think it was about 2 or 3 weeks ago. We talked about which level do you think it will hit first? 40,000 or the 20,000? And it has hit the 20,000 first, hasn't it? So the next question is this the floor? You guys think this is the floor? Again, I don't think so either. I don't think this is the floor. with the momentum to the downside here, I don't think this is the floor. Question is, how long will it take for it to get back to these levels? How long before it gets back to these levels? And we could be talking a long time. We could be talking 2 to 5 years, could be even longer. Or it could be 3 days. You know crypto as well as much as I do. It could be 3 days. That's the silly thing about this. But again, I don't think that's the floor. I do think there's another level down here, but it may drop back to the 18,000 level. Wasn't that the previous high before? 18,000? It may come back down that level, touch it, and then pop back up. It was 18 and a half, I think, was that high in 2018. Does eToro charts go back that far? Well, 19 and a half. 19 and a half because we're doing it in dollars daily. But not convinced. Do I think it'll hit $30? So we'll ask that question again. Okay, so do we think it'll hit 30,000 before it hits 10,000? Which of the two do we think it will hit first? The 20,000 or the 30? Do we think it'll go up? Or we think it'll move sideways and then go down? Which of the two do we think we'll see first? 10,000 or 30? $30,000 or 10? Which of the two? Or down to 3,000? I would expect I would expect this to pop up first. I would expect it to pop up first. It may not come back to 30,000, but I would expect it to get close. I expect it to get close. Expect to get close and then drop. Okay, that's what I would expect to happen. So I think we will have a little bit of upside on this and then drop, in my opinion. But again, it's an opinion rather than an actual fact. So that's what I would expect to happen. As I can't see it just continuously dropping to here, because you will have people who will buy it up at this stage, myself included. Buy it at an area where I'm happy to jump in on it. So that's where I expect it to sort of bounce. And again, there's no point in looking at any of the other cryptos because they're absolutely identical. Absolutely. It's a patient game on crypto at the moment. It's a patience game on crypto and stocks at the moment. It's not just crypto. The ones that have been trending quite nicely at the minute is the foreign exchange market in US dollar in particular, and also commodities. So money has moved out of the more speculative of assets like crypto, and then the more of the sounder assets, stocks, and the money has moved sideways into foreign exchange and commodities. So they're the markets that we should be trading at the minute. There's always something trending. You just have to look for it. I'm too lazy to go through all the cryptos. I am. It's. I was looking at the clock, and it's 2 minutes. So absolutely not. So if anyone wants to ask a question on Bitcoin here, you're more than welcome to ask. And you say that, enjoy the sun. I have a meeting in 12 minutes, so I can't enjoy much of the sun. Okay, so it looks like nobody has any questions. Whoop. Nah, we're not moving on. Tyson said, guys, have a look at USD JPY. So guys, it's been an absolute pleasure. Thank you very much. Hope you have a lovely evening, a lovely day, and I will speak to you, most of you, tomorrow. And if you want to jump in on tomorrow's webinar, let James know in the group or let myself know as well. Okay, everyone, and good luck and thank you, and hope you have a lovely evening. Bye-bye.